Thanks for hosting.
Hey, good evening, Weiren. Thanks everyone for joining us this evening for the second session of the Charting Markets Learn from the Pro series. So today we are very excited to have Weiren with us today. But before we go into his session, right, let's do a quick introduction on what is Learn from the Pros. So Learn from the Pros, right, is actually educational series. This webinar series, right, is designed to provide everyone here with the opportunity to learn from experts in different professions in the financial industry. So over here at CGS-CIMB Securities, right, our goal is to help you to understand the different investment and trading options that are available to you in the market, so that with all this knowledge, right, you can make better investment decisions when you do trading. And also is for everyone here to learn and share from experts like Weiren. So just a quick intro again, right? This series, we have a few professionals, and what we have in the past is we have one session that's done with Hong Hao. It was on AI rally. And all these sessions, right, will be recorded and put it up on our website. So for any of the users, right, or our customers, right, you can always go online and access and then replay and watch it on demand at your own convenience. So previously, we also have Sing Fu. Sing Fu is a TR at CGS-CIMB, and he had an exclusive 4-session online workshop with all our attendees as well. So if you've missed this, not to worry, in future we will be holding more such workshops for our clients. So Weiren, of course, he's a technical chartist also, but he's more focused on charting, on macro. So that's why tonight I think everyone will be in a treat to hear from Weiren on his when he shares his views about the macro economy. So before we begin and proper, I just want to get all this disclaimer out of the way, and basically is to just to share with everyone that is here. We are not here to, if you want to make any investments, please always do check in with your trading representatives or financial advisor. Okay, so there's one thing just want to share with everyone here. We have a upcoming event, actually it's next week, is a Singapore Warrants Festival. So I'm not sure whether if, let's say, any one over here who joining us tonight know about what's structured warrants, or let's say if you do not know what is warrants and you would like to learn what warrants is, do sign up for this festival. It will be held at our office at MBFC, so you can also visit our office as well. And it's an evening session on next Wednesday from 7 p.m. to 8:30. So later I'll share the registration link, and also for today, right, because for all our attendees, right, we will be giving you a promo code whereby you can have admission free to this festival. So do look out for it in the chat box later. So back to our session tonight. So Weiren over here, he's today is the pro for tonight, and with over 12 years of experience studying, predicting price movement in the financial markets, right? He is someone who is definitely a professional who can teach everyone and share his knowledge on the current macro economy outlook, as well as charting on the various markets. So being a chartist, right, the good thing about being a chartist is that you guys, all attendees over here, you can ask him any questions related to any stock counters in any market, because the charting, right, you can actually apply it to any stock counters listed anywhere. So if you have any questions for Weiren, right, please use the chat box function, the Q&A function, input them in the box below, and then Weiren will attend to them at the end of the session. Okay, I think that's all we have for now. Then let me hand this over to Weiren. Weiren, over to you.
All right. Thank you, Wei Jie, and good evening, everyone. So, just before I start, right, I just want to have a shout out on what we just shares about the Warrants Festival will be held over at our office. So please do come out because I think Beanie is there, so I definitely will be there because I'm so happy that she's there also. So get to hear her again to talk about that because the quantitative skills are there. So anything you can ask her also. I remember that time the first time I listened to her was exactly 2011. Yeah, that's over 12 years ago. Yes, like what when I first started out in the field of technical analysis. So she's one of the few that I listen to, and some of her methodology are still is still out there and relatively was good. And she's also a certified SGS Academy speaker. So yeah, just please join us. All right. If and then it's only $5. So if you do not want to and the $5 will be contributed to the community chest. If you do not wish to pay for the $5, Wei will have the promo code. So yeah, so it's like it depends on whether you want to do some charity work or not to benefit the post. All right, so without further ado, I think enough of talking. I think I will share my my slides. So you can see my slides, right? Type 1. If not, if you can't see my slide clear, type 2 so that I won't spend time. So if you can listen to me, hear me well, wow, okay, Zachariah Thomas, Mr. Go, yes, thank you very much. So I assume everybody is good. So I think 2022 to 2023 is still very much on uncertainty. First up, 2022 we were war in Ukraine and Russia. Then over the weekend, the Middle East having some turbulence as well, where Israeli was under heavy attack by the Hamas. All right, but I think on the macro side, much more, I think it doesn't affect the recent bullish environment on that on the equities market. In fact, I think oil prices actually dropped down. So you can see that there's a lot of heavy manipulation ongoing. Market is not knowing the macroeconomic environment is good, but you must think beyond the details. The devil is in the details. So today, I think first part of the segment, I will talk to you about how to gauge the news, what are the data to use, and stuff like this. All right. So if you think that is good, then provide us in the feedback so that the next session I will cater on it. All right. So I think the key macro environment is still inflation rate and interest rate. All right. Is inflation now is tame, and then after CPI last month 3.2%. Tonight will be the next reporting. But the core still remain at 4.7%. I think yes. Yesterday PPM number is rose by 0.5%, and this is a very I would say that this number is a bit high, and then it will likely affect the CPI number because the PPM, the purchasing price manager index, is actually will have an effect on the CPI numbers. But I think what the media didn't say is during the summer, if you look past everything, all right, you look past all the data, you look past all the outlook, and you realize that during the summertime, normally CPI number do goes up, and that happens during the COVID era. All right, with the 2020, you look at June to September, and then you look at 2021 June to September, and then last year as well. So inflation do dip, but remember that the Federal Reserve always have this mandate is to keep inflation at 2% per year. All right. So what are the things that will cause inflationary pressure? I think first up, I think a lot of people will mention that, oh yeah, the Fed has been quantitative easing, cause since 2009 until all the way until I think we started in 2020, where COVID happened. So there was a spike of money flow into the market, etc. So this actually causes much more of the inflation, but I would say that it's only half. This is only half truth. Reason is because I think currently the inflation is due to supply chain. Okay, so I would say that take a look at Japan. All right, first up, Japan has been on deflationary pressure since I think the last decade, when the bubble burst in 1991, and then 1997, Ryutaro Hashimoto actually reduced the balance sheet to pay off debt, and then this triggered another recession. And coupled with the Asian financial crisis, it spiraled Japan further down into the last decade. All right, so deflationary pressure, in fact, started from 1997 all the way until after COVID, where inflation goes up. But remember that inflation in Japan is not due to high like everybody are spending a lot. It's due to high oil prices. Oil prices has been like on $80, and then with the weaker yen, all right, and the export to Japan has been on a deficit. So Japanese import of energy, 90% of them, they rely 90% on the energy, unless Fukushima restart or unless there's nuclear power again. All right, if not, I think the inflation in Japan is likely to go on and on with a weaker yen. All right. All right, so macro environment and inflation and interest rate. I think this chart, I think, is not foreign to most of you. All right, first up, why I say so is because you can look at that. I think last month, I think was at 4.3%, and then it dropped down to 3.7%, rebounded or something. But we are still a distance away from the 2% mark. All right, so you can look at the light blue line and the purple line of the what do you call it, of the oil prices. This over the course of a monthly chart all the way from 2009, where we have where after a recovery, a QE spike, and then from 2012 and 13, 14, it was remaining at a few $100s and dropped to $60, and then subsequently a negative at the time. So oil prices have significantly rebounded since 2020 on the uptrend. Despite recent correction, I think it's likely to edge up higher. So if you can see that the oil prices actually, when it bottom, I think it lead the trend. All right, so it bottom over here, and then it kind of like lead the trend. So in retrospect, I think oil prices do determine what's the US inflation rate is going to, and the oil prices is likely to affect the inflation rate. So another question, and another thing is I wish to add on, which I didn't include in the slide, is Democrats and the Biden administration has been promoting free energy, especially liberal left Democrats. Right, so they have been pro clean energy, which actually kept the capacity and the new drilling grounds for the energy for the oil companies, be it ExxonMobil, Marathon Petroleum Corp, and stuff like this. So this likely with no new oil draining wells, then there is a possibility that inflation, the prices of oil is likely to go on and sustain even further. All right, so the next topic, I think the last session I'm going to briefly touch on is the banking crisis. I think the banking crisis, I think regional banks is not over yet, but I think that it is almost like a repeat of the 08, 07 financial crisis. 07, you see Baston's collapse, JP Morgan scoop up. This year, we see Silicon Valley, Signature Bank all failed, and then JP Morgan scoop up the thing again. And it has JP Morgan, in this retrospect, has already broken the Dodd-Frank act on it. So means that JPM has de facto become the world the largest bank in be it investment or saving banks in the United States. So also, I think outflow of funds will be likely limited and will hit small and mid-sized business. That's why you can see that the Russell 2000 compared to the other index, the Russell 2000 has been on a weaker tone. All right, and then outflow of saving funds of regional banks are on the increase. So people are actually pulling out the funds from the regional bank and then putting it into the major bank, Bank of America, Morgan Stanley, not Morgan Stanley, Bank of America, Wells Fargo, JPM, all this. So, but these larger banks, they are not going to pay the interest rate that the banks are the high interest rate where the Fed fund rates are at. So they are going to pay the usual low interest rate, but people are willing to do that to avoid the risk. All right, so another thing is lending rates have increased. So you can see that this is for example, this as an example, I take the mortgage rate. So mortgage rate, imagine this is in Singapore and Malaysia context. I think some of our audience are Malaysia. So imagine that you have to pay for Singaporean, your HDB loan is at 8.26%. Let's say floating, because I think in the US there's no such thing as fixed. So most of the rates are float. So imagine these are due to the fact that if your credit rating is bad, you will get 8.26% or even higher. Okay, so that fund is at 15.34% per annum. So it's almost a credit card bill. All right. And then if we move on to the macro environment, now we're going to dive in from the larger from country perspective, and then we down to individual consumer. All right, so saving rates actually picked up during June last year, where inflation was rampant. All right, was picking up, and then after that we can see that US saving rates in blue, it actually deep down. And then with all the credit card delinquency and charge the rate of credit card increasing per month, is like you can see that it actually is on the rise right now. All right. So and then this UMH consumer sentiment is pricing above 60. So there is a fact that I think UMH, I don't know how they do it. They are saying that the Americans are not tightening their belt. There's one scenario is because the one I can think of is because the US citizens are fighting inflation, so they are spending more. So they are definitely factoring into the higher cost of living. All right, by spending or not because they have money. I think hourly wages, I think is still dipping, remain flat. So I don't think there is a effect on this. All right, so non-manufacturing PMIs, I think it's not out yet, but I think that is likely to pick up. And then PPM, I think rose 0.5%, and then etc. PPI was up 2.2%, and then likely to increase this year going forward. All right, so these are the supply chain that I've listed out since 2020 for the past 3 years. These are the reason why we are likely to see inflation picking up, especially going to 2024. All right, I think the Federal Reserve is going to hike one more rate. This is a bit of a theory that I come up with. All right, so why do they hike up? Why do they wish to continue to hike rate? Is because first, they just want to reenact like what happened in 1997. 2014 to 2016, they attempt to do it, but I think the emerging market suffered. That's why you got the BRIC nation and etc. But I think the Euro debt crisis in 2012 actually halted the everything that the US trying to recover all the funds flow back into the US. Right now, I think the US playbook is always the same. They weaponize the dollar. When the economy is not doing well, they QE, lower interest rate, flood the whole world with cheap US dollar, come borrow my US dollars. And then when 3-4 years, when the economy pick up, they use this excuse as, oh, we need to, reduce inflation, blah, blah, blah. And then it's overheated, so we're going to raise our interest rate again. And then by raising this interest rate, all right, they will get they'll faster recruit all their money back in. All right, so right now they have one more contender. They have China. All right, China. If you know that Country Garden actually is on the verge of collapsing, and Evergrande actually, I don't know what the heck is Mr. Xi doing. He goes to the US and file for bankruptcy, and that really poke the needle that become a thorn in the flesh for the CCP going forward. And with all this, I think the US is getting ready to use the dollar against China even though China do not have any capital, they restrict the renminbi outflow, but I think Chinese going to use all these countries, use these what the property companies that is heavily denominated in US dollar debts to use it as a weapon to create chaos in the Chinese economy. That's my theory. All right. All right, so I think food shortage in 2024 is likely to go on. That's why you can see that there's a huge delivery of futures for the wheat. You can look at wheat counter. Things are not doing pretty well. All right, so 2024 Q1 will be a crucial period. So recently there isn't any analysis as compared to 2022 January. All right, where they say, oh, the economy is down, is the economy crashing. But now I think the boost profit are coming back. All right, so none of them are, not much are trying to call a recession or going on, but I think 2024 Q1 will be a very crucial period. So in fact, if you look at 2023, the current last quarter, I think there's a tendency that we are likely seeing one more rally up, and then next year opening during the first, especially January, are we going to see a very good January effect or not? If not, if it's going to repeat of last year, then we might see a wave C going on. I know that some of you wanted to know about Elliott wave, so I will talk about Elliott wave as we go on later on. All right, so yield curve still remain inverted. I explained this I think during the last session, so I won't touch this on much. I think basically when the recession happened is when the yield curve break above the zero line, accelerated very fast. And the another indicator I use is when when the Fed pause and then hike the rate, cut rate, and then there might be a fall. 2020 is a bit of a coincidence because of COVID, but SARS didn't really see any pandemic, don't really see a very, very strong up. So, but I think that crisis, every time it pauses, you can see that there's a rally, it pauses, prices go into range. So right now, if it announce a pauses, I think it might go to range. First cut, there will be a first sign of a drop. 3 cut is the magic. All right, 3-way cut, and then the market will rebound, and then followed by a huge crash down. That's the theory that I've been observing, and that's what happened in 08, 2020 and 1990 and 1987 as well. All right, so this is what I have plotted out. So you may take picture on this, or you may watch a replay to when I talk about this. All right, so another factor is I will use labor force in the US market. So Fed barometer to rate the decision. I think the jolt pickup is due to the summer effect. I think during the summer period, I think a lot of people a lot of companies are looking for temp jobs, and people are filling up the jobs, I think, and then payroll, non-farm payroll raised about 336,000, but wait for the revision first, and then we shall see how is it going on going further. Okay, so let's go on to the unemployment rate. All right, US use this measurement of unemployment is using a natural rate of unemployment. So this if I go, basically is a phrase coined by Milton Friedman, where is the famous economist that coined the monetary theory. All right, so if you are interested, you may go and search for him, Milton Friedman. All right, to do more reading and watch some YouTube to understand his theory. Basically, his theory is all about monetary policy. When you control money, M2 money, you control inflation, and then inflation is a result of unemployment and employment rate, and then vice versa. And then he come out with this on-metal Philip curve, which a lot of strategists and economists think that is load of boost. All right, so I'm not going to say the word. All right, so next one, the market I'm still very bullish will be on India. All right, so why India is because first, India is the only index that break through all-time high All right, and then last season, if you remember, I shared about India. I think that my target is 20,000 will likely be met, and then it actually broke off 20,000 before correcting down. Even after the correction, I think it's going to sustain well. So I think the next leg is likely to test 20,000. So if you remember, please type 1 if I shared about this, so that give me some encouragement to share on, to say I'm spot on. Just kidding. But if you wish to type in something, please type in. Or if you remember it, wow, yes, thank you, Thomas. Thank you. So thank you for your validation. This made me really, really passionate and sharing on this. All right, so the reason why I go through very fast on the on what happens macro is because I want to follow on because it's like the title is say trade with the pros, and I just want to share with you guys what I want to call continue forward. So I think the best strategy, I think last one is we talk about trend following, mean reversion to trade on the fade on the counter trend, and then lastly range bound trading. But I think that for equities market, the famous saying, I think trend is your friend, follow a trend. Trend following has I think if you read the Turtle Trader, I think trend following has always been the best team. I think the best investment strategy that we have, but there are a lot of variations. So I'm going to touch on 2 things: trend line and moving average. And then after that, I think someone during a feedback session for the last session talked about Elliott wave. So I'm going to go some Elliott wave on the live chart itself. All right. So I think this one I've talked to you before. So for trend following, I think if you trade on CFDs or especially on the FX market, I think trend following you need to be very careful, because first FX market and CFD market, they are leverage products, so it means that there's a risk of margin call. But if you're trading pure equities, pure postpaid account, means that you trade based on the number of money in your account, then you'll be safe. All right. And trend following is very good for stocks like Apple, Microsoft, those large cap stocks. In Singapore, you can talk about DBS, SGX, ST Engineering. Later, I will go through some of it and etc. All right, so we have a breakout system pattern recognition. So later I'll go incorporate some pattern into it, like inverted head and shoulder, which I don't really like. This is more reversal signal. And more on falling wedge, flag, uptrend line, support, resistance, etc. and all this. And how to see resistance and support as a dynamic factor. All right, so trend line, the sim is what I'm going to start on. If you think it's too easy, right, let me know. All right, just type something out in the chat. Say, hey, this is too easy. Weiren, can you please? We don't think that we are stupid. Please go on. Something about. Let me know. All right. But still going to go through, because I do not know how many attendees are first time using this kind of system. All right. So first up, I think using trend line. What's the best thing about trend line is because it's very easy to use. All right. I think when I first started, I learned how to draw trend line from someone. My friend, someone older, he just sitting at McDonald's at Choa Chu Kang. He teach me how to draw a trend line. So always say trend is your friend. So trend line, how do you draw the trend line? All right, you just basically you plot it out. So later I'll do live charting, and then we are going to go step by step on it. The webinar may be overrun. We still got around 30 minutes to 40 minutes more. So yeah. Okay, so easy to use, easy to spot, but there's this thing, we are all human beings, we have biasness. So means that maybe I prefer this trend line to be drawn at this level. I prefer this level trend line to be drawn at that level. And if it breaks, analyst A will say, hey, it didn't break. Analyst B say, yes, it break. So there's a lot of things on this. So that's why you need an additional filter. Rule-based, all right, discretionary rule-based also possible as well. All right, so first thing, this NVIDIA Corp, I think all the way until last year, October 2022. All right, so NVIDIA was a hotter subject. Why I use NVIDIA is because I think my colleague Jadif has actually issued NVIDIA Corp in early January this year, and he has sold 147%. All right, it's on our research portal. If you like, you can go on and then Why do you think so? It's like, all right, so if our clients, you will know him in and out. Yeah. All right, so trend line. So you can see that there are two trend lines that are drawn. So first is the downtrend line that's in. So this is a dominant trend line in red. So I connected this is in top from December all the way this all the way until this one was 2021 at the top, and then it follows about all the way down. All right, so Nvidia was on a downtrend, and then steady downtrend means that this look 45 degrees, 60 degrees. So this is once look, you know that this is a long-term downtrend. All right, a period, a year, a 1 year period. So 1 year Nvidia was downtrend. Also, there are some sort of like hiccups. You can buy on a bottom or a mean reversion. There is a possible mean reversion. So here you can see that clear support gap, strong bar. So this is maybe a demand over here. So you can trade on the demand over here and then rally and then come down again, then goes up. But mean reversion, you can see that if you are not careful, you will be stopped out very easily. And then prices goes up and down and down. All right, so I plotted the second downtrend line. All right, and then you can see that the reason why I plotted the second downtrend line is because I want to know if it breaks up, then I can ride on the wave. All right, so it breaks out a support, and then prices show some, and then there might be a correction. So true enough, I think on early part, I think it rebounded thereafter on this. All right. So in fact, yes, it came down, break the secondary downtrend line, means that hey, we are seeing higher high, high low on the secondary basis, and then break above by gap up and then came down again. But I still have my buy limit and my support. So why do I have this despite I knowing it's a downtrend? First is because it has already broke out of the downtrend, broke out of the second downtrend line. Higher chance that that there is a mean reversion up already, and maybe it will be a strong dominant uptrend going forward. All right, and then ChatGPT was around that time also. All right, that yeah. All right, so it came down and then touched the support and then it rally up further. All right, so this whole thing is uptrend line thereafter. So if you buy from a support, and another thing why I will consider buying a support, because if I'm going to stop my stop loss, maybe $100, maybe $98. What is the risk? Means that I have, like, let's say you decide to take profit over here. So the risk to reward is actually quite profitable. And maybe here you are aggressive, yeah, the previous high. And then once it break out, and then you know that higher high, higher low, higher high, higher low, higher high, higher low, you know that the trend is back in demand for Nvidia. All right. All right, so the next one is to counter on the trend on stuff like this. We use moving averages. All right, so moving averages is a very systematic way to chart the trend. Even the fundamental analysts use moving average on the on the basic TA. Or if price above the 200 DMA, then it's on uptrend on the long term, right? But I actually I changed some. I tweak some effect, which I'm going to tell you why I do that in a short while. So you can use MA for short term, mid term, and long term. Means that short term trend is up, you can do a mean reversion, or you know gun on a early reversal. Mid term, if short and mid is with prices above short and mid term, then prices are likely to trend above until it breaks the long-term moving average. So there are two types of MA, simple and or exponential, but I prefer exponential. Reason is because exponential actually prevent the drop-off. So as compared to SMA. So for EMA is much more sensitive price changes. For SMA is much more lag because of the drop off. Means that, for example, a 20 period simple moving average means that first 20 and then 21 they will use the data at number 2 and then carry on. So but for EMA there's a calculation which is very hard to talk about it, but basically they will add in and then create one formula to smooth it out to go on for the EMAs. All right, so more sensitive. For common strategy that use is golden cross, death cross. midterm cross above below long-term EMA and prices above all EMA strong trend etc. All right, so this is a chart. So again, NVIDIA. So the red line is the 252-day moving average, and then the black line is 63-day moving average. So okay, so let's do a simple challenge. All right. I don't know if you know about moving averages, but once look, no wrong, right or wrong answer. Just say something. All right. Do you think that for NVIDIA, all right, is it still a buy, or will consider wait for pullback and then take profit? That's type of answer. All right. Sell. Okay. Yeah. What? Okay. Sell. Okay. Anybody? Thanks, sir. Thank you. Anybody? Only one. Okay. Never mind. All right. Sell all possible, but why sell is because I agree with this gentleman, but I will sell now. Right? Because first, trend is up. And secondly, my stochastic, this stochastic I'll touch on maybe in the next future season, but stochastic mainly overbought, oversold. So there's not, it just crosses. So there are chances that it may just punch a weight higher. But as near the approach, excuse me, the resistance, I think I think it is time. It is not really a good time to chase after market. Also, basically, I think if it reject the resistance at 479, 480, it may form a potential head and shoulder, which is bearish reversal signal. But I won't sell now. Why? Is because prices are still trending up. If you incorporate the trend line, is still on the upside. So and then the short-term moving average and the mid-term moving average is actually sloping up, and then basically it breaks below and then rally up onto the upside again. So but I do agree there may be a short-term selling. My guess, all right, may break 480, targeting around 505, 510, even maybe, or maybe higher level of 500 before coming down straight. So I will sell now, but I'll KIV for this. I won't chase the market. If you want to chase, maybe you must have a slighter loss. Maybe wait for pullback at around this level before going in again. But I won't use this. Instead I'll do Apple. I'll focus on Apple or AMD. Later I'll chart, I'll do AMD as well. All right, so that's all for now. Any question or answer, please type in, or any stock you wish me to do it, and then as a case study. All right, let me know, and then we can go into it, and then use trend line, and then I will touch on the Elliott wave as well. All right. So before I go into the before you think of the titles and Q&A etc. I'm going to bring the time back to Wei Jie. Wei Jie is going to do some sharing first before I carry on. Don't worry, please don't lock off. We still got time for that. All right. So Wei Jie, I pass the time to you first. Thank you.
Thanks, Viren. Thank you. Just give me a minute. Okay. Thanks, Viren, for the first half of the session. I think that's very interesting. I think the main reason why I'm stopping here for a short while is because I just hope to share with everyone about this webinar. So what I'm hoping is that, right, because I'm requesting, asking everyone a favor to basically to give us your feedback, and your feedback is important to let us improve on our future webinars as well. Just give me a minute. Let me swap and yep, I hope you can see that better now. So if you can just spend a few minutes of your time, right, to give us your feedback and let us know how we can improve for our future webinars with Weiren, not only Weiren sessions, right? So if there's anything, or you like to hear other topics to learn more about fundamental investing or certain thematic webinars. Do share with us, give us your feedback, and we will incorporate your feedback into our future webinars as well. So let me just hold the slide here for another few seconds. And in the chat box, right, I have also shared the link. You can click on it to submit your feedback later. And yeah, so by the way, if you have any questions for Wei Ren, right, like just how he mentioned, if you want to know more about how's the stock market going to, how's the trend is for any stock, please feel free to input them using the Q&A function, and Wei Ren can proceed to share his analysis with you. Okay, so I think I'll stop share and back to you, Wei Ren.
All right, sure. Thank you. Thanks, Wei Jie. So first up, I think we're going to use AMD. All right. So if let's say we're going to peer-to-peer reverse peer-to-peer comparison, then I'll use AMD as the next one for the upside. All right. So for NVIDIA, I think the next contender for GPU chips are AMD, and that AMD, you can look at that. I think from last year, I think the trend has accelerated up, and then followed by a correction after hitting a top over here at 138. But I think if you know this pattern, let me know. This is a falling wedge pattern as well. All right. Okay, so we seen, all right. Okay, so basically an uptrend, higher lows. But secondary trend line, yes, we do see a breakdown with a weaker selling pressure. But I think prices still remains right above the moving averages. Short term, you can see the short term is sloping up. Likely if we cross above the 50-day, that means that likely you're going to see further upside testing this resistance at this level. All right, so if you look at the chart overall, the long term, you can look from the perspective from wow, this one, AMD last time very jiao la. Never mind. Okay, so if you look from the perspective, right, I think we do see a longer term period, like breakdown of the downtrend line. So in fact, over a longer term, we haven't seen yet a push up, but since it has already broken down this channel, downtrend channel, that means that the price is up. All right, so for if we're going to see the wave theory, all right, wave theory, if you are familiar with wave theory, it goes into the 5 wave, all right. Wave 1, 2, 3, and 4, and 5. All right, so in this case, there is a bit of, if you take from this uptrend, right, there is a bit of illogical in this uptrend. So first up, if you're going to start from the bottom, let's take this as wave 1 and 2. So always the rule is wave 1 must actually target 161.8% or higher. So there is a possible that is a extended wave 1, 2, 3, 4, and 5. So this one is our wave 1. So I'm going to use this as 0, 1, 2, 3, 4, and 5. All right, so 1, 2, 3, 4, and 5 basically use this wave, use Elliott wave as a guide, as a a GPS system, right? It's like you go in Google Map. So so once you think that, oh, this is wave 5, and then you look for there's this indicator RSI, look for divergence. All right, so oversold, you can see that it peaks over here, oversold, and then followed by another high. So there's a momentary divergence over here. So in fact, then you will gap down all the way going forward on this. All right. So right now for A, B, C. So every time after a 5 wave, there is what a corrective wave. Corrective wave are normally in A, B, C manner. But I think that this complete or whole 5 set, this is wave 1. I think or A. So now this corrective pattern is likely to be completed. A break above falling wedge, above up. So that's why I think that there's a possible that we might hit on the straight to the upside. All right. So far, any question on what I displayed on the wave theory? If there's any question, let me know. All right. All right. I foresee how many Tesla. Yes. Yes. Tesla. I will touch on Tesla again. Most of the stock I will touch on. Don't worry. Okay. So no, seems that there's not much question on the Elliott wave theory. So then why? I'll do one more. So Tesla is in my mind. So Tesla. Okay. So Tesla. All right. So Tesla basically, very good example. All right. Tesla from November 2021 has been on the way on the downtrend. And then, oh, never mind. I use this like this. All right. And then, breakdown of the downtrend line up. And then 1, 2, 3. So, for Tesla, I think, if you're going to use the wave count, I think we have, wait, let me see if this can be considered a wave or not. Not yet. I think wave 3 is invalidated because I think the corrective wave actually drop below the high of wave 1, and then it's only at 1.236. So this one is likely the whole move, the whole up move over here. All right, this up move will likely be a corrective wave. So means that and there's a pattern up trend. So means that this one A, B, C. Okay, I won't actually the corrective wave is very fun because we have WXY going forward. So this larger down move is likely a corrective wave. So means that this up wave move, this wave 1, and then wave 2 is likely to be a one more downward move towards here at $55 for Tesla. But that's too far-fetched on it. So ABC. So the corrective wave is not likely to be over. So we might see another one more set of downside coming here. This support around this level at 247.75 come up and then form another leg up ABCW. This W, this I'm going to put this as wait, W wave. So W wave is actually the whole set of ABC. So corrective wave normally happen in the set of 3 waves. So this is 1, 2, 3 ABC, ABC, ABC. Okay, 1, 2. So this actually can be a impulse move, but like I say that because of this first move, second to this, and then the correction actually break below the support, then therefore it's not a very good good outlook on this. So if we're going to use the Fibonacci extension, going to use here, I think the next wave is likely to all over the near term, near mid to long term actually, I'll be at 259 or 304 target level. Right. So what is the level that I'm looking out for will be at, if there's a correction, then this level must hold on to see. So because if this subwave, you can see that the subwave over here is 0, A, B, C, and then A, and then 1, 2, and then one more down wave, maybe perhaps maybe even down some more at 216 before attempting upside. So basically based on the trend, it actually can, based on wave and the trend, you can actually hold on. All right, unless it breaks a low, so you have a stop loss over here at 203. If it breaks below this 203 stop out, then look for other opportunity instead. All right. If you are in the market, you can consider take half the profit and then let it ride to secure some profit. But if you are not in the market right now, wait for the opening and the reaction, see how is it going to be. All right, because we are near the intraday resistance, so it's very hard to gauge what's the next one ongoing on this. All right, so next one, CETX. So for this, I think I'm going to look at the monthly chart. Okay, this is definitely a chart that I won't want to touch. I think this one is is on the downside, and not really a very good market to watch out for. So I'm sorry, this is definitely a downtrend. I can see that volume actually dies down after that. So this stock is likely to be gone. All right, so sorry about that. All right, 857. PetroChina. Okay, both PetroChina, very typical. Okay, so I'm going to use the NR chart. My so MR chart, I think I won't use Ichimoku because it's range bound. Okay, so what we have really learned for this is PetroChina, you can see that it's ranging at the top. So when it range at the top, it's definitely not a very good sign of a stock for a stock. And then some more, it do have this gap when a large bearish gap down is called a breakaway gap. It's happening over here. Touch rebounded, going down. We can see that it has already break low with test near to the downside. And then after that, there's this thing. Okay, so this will be the next preview. All right, next view on my next session in November. But I'm going to give you some like highlight on the indicator I use to gauge. All right, so the indicators, you can see that MACD I draw it out to a very long term. Credit to Jake. This one of my senior portfolio, now a portfolio manager, he created this system. Very accurate system that I have, and then through inspiration, I backtest the 53-10-10 stochastic. All right. What the CMT education does for me is because that I learned how to experiment with parameters. All right. All right. So everything is down. All right. Breakout of the range. You can see the range power has already broken down. Break down this first, and then break down the uptrend line. Let's see the moving average. All right, moving average though means that possible downtrend towards touching the 252-day moving average before rebound. All right, and then you can see that rate of change is heading down. So for PetroChina, definitely is on the downside. All right, likely to face another wave of correction down. So if you ask me where's the support, I'll prefer this level. Strong buying pressure you can see over here or after or here at $4.99, but I prefer $4.43. Why? Because this large consolidation, if it didn't really break above, which I think that possibly there's a huge correction down despite oil prices going up. Okay, all right, so next one will be on Sheng. So Sheng, especially I think is on the downside. Death cross has been seen. Although there's some bullish divergence ongoing, I thought that I issued this trend bottom before. Actually, but it did follow through and then it breaks down. So I think prices is still trending on the downside. Downtrend channel on this. If you look at the trend line, uptrend, breakdown already, low highs, low highs, low highs, and then some more maybe a lower low. So I think that the next support that is possible that I'll be looking at will be at this level. $1.43 on this. All right. Genting is also another one. I think Genting experienced some breakout to the upside this today. But you look at that, look at volume and wise, we do see oversold from the stochastic, but I'm not confident. Reason why, though the downtrend line, there is some breakdown. All right, some break, but it's not a very strong break. You see. All right, so and another thing is I need one more confirmation. If there's one more confirmation up testing and pull back and then up the lower high, then I'll confirm getting into it. But for now, death cross everything. I won't even get into Genting. You can see that our trading volume has increased, but you can see the bar remain very tight. So you can see the volatility using the changes of bars. You can see that it's not much, 4.12% for 2.17 million shares. Not really a good one. All right, so Holiang, thanks for asking. Yeah. Okay, if you look at next one, okay, venture is a very good one as well. All right, venture. Okay, look at venture downtrend as well. All right. I thought there's a strong bullish one, but it break lower. Oversold crossover and yet another oversold crossover, but bullish divergence is seen. But it's still very weak. All right. This despite all the indicators showing all this, it has break below. And I think likely we are going to see because the reason why they falls because of the MSCI exclusion of it. Likely on downside again, maybe to 1170 before rebound up and then coming down again. All right. Capital Corp, do they did come out on a strong note, but still remain on range bound. In fact, I have a short call on Capital Corp recently on this. So if you look at Ichimoku, all right, this is likely is still on the bearish downtrend. All right, so if we're going to remove everything, all right, upside three-way pattern, but I think that the major support I'm still looking at $6.22. Another factor I'm looking at will be the oversold crossover over here. All right, Amazon, yes. So for Amazon, okay, so let's look at the thing. All right, let's look at the trend. How's the trend like? Okay, prices still remains above the 252 EMA. Long-term trend remain intact. Yesterday breaks above the crosses of 23 and 252. Secondary trend remain okay. Secondary trend is broken down, so we are in this. So secondary trend is a bit of mix. So likely higher prices going to go on. First up, I think is because of this support zone. Okay, so this support zone that we have seen. Likely to see one more push. In fact, if it breaks lower A, B, or C, then we are likely to see 114 or 118.2 going forward. But can see a stochastic perform a crossover. So likely we are going to see one more upside testing 145 going forward on this. All right. Yep, Amazon. So okay, H22 is Hong Leong Asia. So Hong Leong Asia range bound, short-term trend, upside, double bottom. So instead of saying this as a short-term uptrend, I would say that this is much more of a range bound. Volume wise has been low, so I won't pay so much focus on this stock. I say that MACD is up, yes, definitely, but let's look at the Ichimoku. So Ichimoku is well, that's slow. So Ichimoku sideways, upside. So any upside, I think will be very capped at 0.67. All right. AEM, yes. So let me see AEM. Let me find my old report on AEM. Uh, yeah, give me a moment. My research website is still down, I think. Okay, let's see if I have AEM over here. Okay, AEM is, I think it's this one. Yeah, I think this one, yes, confirm. All right, mean reversion rebound on this. So 24th August, I did have a break, so it break up about $3.36, nearing my $3 target. I think going to 380. So if you look at this, yeah, look at it. All right, I think I'm going to put in the chat so that you guys can have it. All right. Okay, so let's go back to the chart. All right, so this was the prime higher lows. Prices was downtrend, but I decided to take a plunge because of the mean reversion trade. Crossover higher lows of this, and I think it's going to revert upside. So but I won't chase the high. I'll wait for it to simmer down. Go back to the support at 348 before heading into the market. So if you look at that, look from the longer term perspective, from the high itself in 11 January 2022. Let me use a yes, correct. Yes, the high is there. All right, so he has already broken out of the downtrend line. So from this, you have higher high, high low, higher high, higher low, higher high, and then three-way correction down to a higher low. So I think if you're going to plot out the uptrend line, I think range bound first, but 1, 2, and then target price. So always I'll use this Fibonacci indicator. All right. Target to 1.618. $4.30 is my ultimate target over the long term. All right. All right. May I know RUT? Is it Russell 2000? US market. Yeah, I think it's Russell 2000. Okay, so Russell 2000 definitely, you see that explains that why I think that okay, I'm going to use RTY Russell 2000 E-mini futures. Okay. Still on the downtrend, very much on the range bound effect, overbought scenario. I can see. All right. We can see that it's going to go up, but I think we do still have this contender of resistance to contend for at 1835. So unless it breaks, if it breaks up above 22, 23-day EMA, then it will be a short-term trend. Otherwise, I think with the depth cross over here, it's very hard to determine for the next one going forward. Very much range bound at the bottom. Okay, not really at the bottom, but it has been range bound since last year. Where all the S&P 500 has risen, but the small cap are not. All right. Hong Kong land, one of my transport pick also. So came down. I think mirror version going up. I think it's likely go up for this. Targeting $3.82. I have a great chance of that. With the Hong Kong, I think recovery. So I think it will be ongoing. All right. So Y92. Okay. So Thai Bev came down, still on a bear trend. Not much of the upside signal for now, so I'll skip this on Thai Bev. All right. Not much upside. All right. So next one I'm going to share with you like on the Ichimoku. All right. If you are interested, let me know in the feedback form that you have. So I will just once we know it on this as well. All right. So let me know if you would like to know. Okay, yeah. So for Ichimoku, briefly touch about the most important thing is it consists of 5 indicators. All right, on 5 indicators, and then if price trended up above the cloud is a major uptrend. So one of the thing I would like to share is on Apple. Why I decided to do a buy call on Apple itself. All right, so first, I bought a buy call over here. Previously, I think or last, what was it? Let me see the idea. Never mind, it's okay. I forgot when is it. But based on this is a very classical example of Elliott wave. 1, 2, 3, 4. I think it's going to go up already. Quite strong. I think it's likely go up on a strong upside. So for this in Ichimoku, I think it closed above the 26 period base the purple line. Then I think there's a possible that that this falling wedge is likely to see a breakup above. Okay, so but I'm waiting for this lagging span to go up. Due to time limit constraint, I'm unable to share everything at one go. So for Apple, I'm looking at this target price at 198.45. Also as well. So ROC divergence has been seen. So looking for a possible mean reversion up to the upside again. All right. How about if you use moving average? Oh, that would be great because it just crossed above a 63-day moving average. How about the 50? Let me see. 50 has already passed as well. So yeah. Okay. All right. So for Comfort Delgro, Comfort Delgro is my favorite since 7th July. All right. Clear, very strong uptrend, but as we are nearing the resistance, all right, at 1.37, 1.35, I think there might be a pullback. So if there's a pullback, I think it will be down to the support at 1.19 to maybe 1.23. All right, so that's all I have for this. But definitely, I think Comfort Delgro is likely to edge up higher, especially if you use the methodology on the trend line. Okay, from the top, April all the way higher, high, high, low. So we in fact we are there. So will there be a correction? Likely, but look from the perspective on trend following, I think there is a chance that it might just carry on this. All right. All right. So wow, that's a lot. I'll do on S&P 500 and then STI. So and then maybe on the Dow. Nasdaq. Okay. Last question on this. So I'll do STI. So STI is okay. I'll take this chance to explain as well. STI definitely is on the range bound. All right, scenario came okay. This morning it came up. So Ichimoku is rendered kind of useless, not really useless, but not very effective. Range bound scenario. This is a very classical example of range bound. But in fact, if you're going to look at the whole trend, STI has been range bound for quite some time already. All right. So it's like Russell 2000, but Russell is on the bottom. This one is on the top. All right. All right. So, but I think crucial one. If you employ Elliott wave is A, B, C, W, X, and then maybe a Y wave up to 3290, 3360. All right. But I'm confident that with this forced climate sell down, rebound at 3150, I think we are looking for a very strong upside on this. Just mark my word on this. All right. All right, so STI and then HSI. HSI, I'm a bit of mix. So short term, we are likely based on wave theory, we have completed maybe with that, but if there's a sudden pullback down, I think we'll be at 16,700. That's all the thing that I've been sharing on the Hang Seng. But Hang Seng, there's an oversold crossover. So I think likely recover, but key crucial level will be 18,600 and then followed by 19,000 psychological resistance level. All right, so next one will be on SPX 500. How about I use the wait, let me see S&P. Which one? I can't remember which one. Okay, so S&P 500 oversold as well. Hit my 1:1 AB equals CD. So likely to, and he has already trend up above. Longer term trend, this from October low is nicely tucked on the uptrend line. So this is likely to be a correction. And if this wave one, I think let me see if this wave one, I think we still have room all the way to 4,763 if this is an impulse wave. If it's not, then likely this ABC. So I think we're going to look for an upside. But I think S&P 500, I think contender will be first 44442 and then 4489.34. All right. Nasdaq futures. Nasdaq, one more break above the cloud, and then the 26 are up, going above the candles. We are likely to see a break above the upside again. So oversold crossover. So uptrend is though it just break though it just break down, but I think this is some sort of like a channel, and then a break is likely going forward on Nasdaq. So I think the US market in the whole month of October is likely to go forward with a strong rally on this. All right. All right, I think that's all for now. All right, thanks for your kind sharing. So, I think due to time constraint, I think you guys are this late in the night. I think you guys are maybe tired or what. So I'm going to stop my sharing now. But thanks for all your kind attendance attending today. I hope this session is useful. It's a bit of the time is a bit short. So if you'd like to meet see more of this, next Wednesday will be a good chance. I think just come over to our office. Is at MBFC level 9 Tower 2. All right, register, and then maybe you just say someone or see someone or not or what, just approach me. I do not see you in person, but you recognize my face here. Okay, so let me know. Yeah, we will talk more about it. I'll share some market outlook, but it will be a 10-minute market outlook on this. All right. Just come. Any question you have, we'll mingle around with food. And is there any drinks? I don't think so. But with food. All right. All right. So just mingle around and we'll talk about it. Yada yada. All right. So yeah. Okay. So thank you very much. On this. Oh, sadly I'm in Thailand. Oh, okay. Sawadee krap. All right. Wow, Thailand. I haven't been to Thailand for very long. Yeah. So but anyway, just come on. But thanks for joining. I can't really pronounce your name. So sir, Kun, Kun, Kun. Sorry, I can't pronounce your name. So I'm afraid I'll pronounce wrong name. But Kun, thank you. Thailand. There's one chart. We have a Thailand SDR. So PTT. Anybody know PTT? This stock. We have this on the Singapore, so it has rallied up very closely, rebound and almost oversold. Okay, so PTT is good over Thailand, but let me see if we do have an SDR released recently. Singapore has stock, so PTT SDR uptrend despite oil prices correcting. The stock actually rally up a bit. All right, so good for all this. You know, I just remind me that we do have the Thailand SDR, and then trade on this. Although we're near the high, but uptrend remain intact. So there's a strong buying volume on the SDR itself. All right. So any question, just put in the Q&A, and then on this. All right, thank you very much, Thomas. Oh, so you're from Malaysia. All right. Hi. Okay, so those who are in Singapore or Malaysia working in Singapore, just if you can just come over for the event. All right, I'm looking forward to see you all in live. And if I go to Malaysia, Thomas, I'll really want to see you in person. All right. All right, thanks everyone. So have a good night. I'll stay up for a while before we end all the session.